What's up, guys? Dwight with Defying Finance. Going on my morning walk using my stepping app. Just want to talk about the market this morning. Market's selling off, and I think you're just going to continue to see this. This is where you get these bull, or well, you call it a bear market rally, really, where the bulls come into the market. They think that, this is it. This is the turnaround. And then they get beaten back out by the bears who are selling, people who are taking profits. And I don't think this is going to stop for a while. You might have a longer rally, but we are heading into a recession. I just say we're going into it because the probabilities are so incredibly high. In fact, we're likely in a recession, like I said on one of my other videos. But I think you have to be careful in this stock market and in the crypto market, because you're going to see these 10% runs up and then selling, and then you'll see another run up, and then you'll see more selling. So this is a great time for traders, maybe if you're going to play that side of the game, but it's not really a great time for people who are just going to buy and hold. There might be some assets that are at fair prices, but I'd be watching those PE ratios for good companies. I'm waiting to see Apple continue to get crushed. I want to see Netflix continue to get crushed. T-Mobile, Verizon, places like this who have real earnings, but the stock price, it's overpriced. And people really need to start understanding that if you're going to be in this game, you have to put some time into understanding where that real value comes from. And you have to understand too, places like Target and Walmart, as they just got beat up pretty bad, their earnings are going to continue to fall, right? As you roll into a recession, you have people spending less. As you head into a potential credit crunch and credit starts to seize up, there's less people borrowing. There's less credit card debt. I mean, right now we have credit card debt exploding, but that's going to flip here really quick. And if you remember 2008, 2009, 10, all of a sudden people were getting contacted if you had like $10,000 in open credit on a credit card that wasn't used yet. All of a sudden you woke up and it was down to 5, down to 4, 3, because they didn't want people to go spend that credit out there if they didn't think that they could repay it. But I think we're going to see that again. But that's where all of our spending comes from. Unfortunately, we don't have a legitimate real economy. A legitimate real economy doesn't operate on debt and currency that's printed out of thin air. That's not how it works, right? You have to build something and sell it to another country, and they send you something back in value. And in a way, the United States, I have to say it's sort of genius. We're sending pieces of paper to the rest of the world, and they're sending us real stuff. I mean, that's ridiculous. You wouldn't do that in your personal life, right? But that's what's been happening for many, many decades now. It's just crazy. But anyway, this is that time where liquidity becomes an issue in the market. And ultimately, when you see those the percentages go up in the stock market, that is liquidity coming in, right? And as that liquidity comes in, I'm selling certain things and pulling that liquidity out, right? It's the same thing when I'm using this stepping app right now. So I know that liquidity is coming in. There's real currency attached to these that are coming into the market. People are trying to, buy these NFTs and use them. And yes, they can earn a currency. It's another type of currency, and you could go trade that in the market for real currency, like a US dollar, right? Well, as that's coming in, you need a seller, right? You need a seller of one token to be able to buy the token you want. Well, I want to be that seller. So I'm out here printing these tokens right now. And as people come in and they want to play these games or whatever, that's fine. But I want to cash out. So I'm constantly cashing out. I'm not trying to cash out in huge chunks because maybe there's not enough liquidity coming in that moment and I don't get as good of a deal, right? It's a bit of a process, but the point is it's no different when you're playing in the stock market, except, much higher liquidity, many more dollars coming in. But what you have are big corporations, big hedge funds. They want to sell their positions, but they can't sell too much. Otherwise, they drive those prices down. So they're slowly liquidating. So I think you're going to see this chop sideways a few days to a week and then a sell-off. Then you might see it rise, and that's going to be an opportunity where bigger places are selling out. Now here's the thing. Those who still have a job, when you're contributing to your 401k right now, you are the liquidity coming in, and they are the liquidity going out. So in a way, you're sort of getting burned, and that's just the way it is. That's why I don't use a 401k, but I also learned how to manage my own assets, so I understand why someone would, especially if you have a great match or something at your work. So I mean, it does make sense. And I would say, kind of like Dave Ramsey. I don't agree with Dave Ramsey on debt when it comes to real estate, for example. I think he's absolutely wrong. I'd be buying investment properties with debt. You'd be crazy not to, right? Otherwise, everybody out there who's trying to, get into real estate, they're not going to save $300,000 when they're making $50,000 a year. It's not going to happen, right? But I agree in the sense of, I lost my train of thought. I had a giant Great Dane walk by me. Man, that thing's huge. But anyway, if I remember that thought, I'll get back to it. But the point is, you got to take those opportunities to sell. You can't get stuck in the mindset that this is going to go up and up and up. I mean, this can't go on forever, right? So you have to take advantage of it while you can. And you want to buy a dollar for 50 cents. You want to buy a dollar for 75 cents. That's the goal. And real assets are going to be king, I think, for quite some time. Here we've had just some crazy times over the last 40 years in the bond market and stuff. I think a lot of that might be ending. And I want to own companies that produce real income. You have to get away from companies that have these sky-high stock prices. And you might say, well, what is a sky-high stock price? Well, look at the earnings of the company. What are the earnings per share, right? And then look at their total market cap. Start looking at these things and deciding for yourself, if it's a good idea to continue holding that company. And a lot of them aren't. And that's why you see these giant sell-offs in the market. It's like right here is where the stock price is, but their earnings are way down here, which means that gap between that is the delta where that stock could fall at any moment, right? As soon as a value investor says, yeah, I'm not going to buy that. They don't make enough money. That's what we're starting to see right now. So I want to be focused more on the value side of the company and dividends, but they have to produce, or they have to have, great earnings. Don't focus on the revenue. Revenue is going to be really deceiving because of inflation. So when you're hearing, oh, but look, Target's revenue's up so much. Well, revenue, it's priced in the US dollar, okay? So you want to look at their profit, because if the expenses, in order to get that revenue, are up dramatically, then there's no profit, right? So who cares about the revenue? You want to know how much is that company making. Forget the revenue. This is how everybody got duped into buying a bunch of these stocks is, before something goes public, they'll ramp up that revenue, but there's no earnings. And you come running in to buy the stock and you're watching the stock price go up. And if you're a trader, yeah, that's great. You're going to get out. You're going to be in there for 30 days, 60 days, 90 days, and you're out. But everybody else who's buying in, you don't really understand the earnings side of it. You're going to get crushed. And that stock price may not return back for another 10 or 15 years. You don't know. So the idea is you focus on companies that actually make money, but relative to their stock price. That's what matters. Because you don't realize it, but if you're just looking at the stock price, and there is a technical play you can do on that, I understand, from the charting perspective, but when you look at that stock price, it's deceiving. So don't buy based on stock price alone. If you're going to hold on to something for the long term, I think that time is coming. Maybe for some companies, it's very close to being here. It just depends on what's going to happen here. But I think you're going to continue to see earnings fall with all these companies as the demand decreases because the Fed's raising rates. It's not really tightening. The market's doing the tightening. The Fed's barely done anything. But anyway, my great walk. Heading to the dentist. He's actually right here. Anyway, I'm out of here. Make sure you like, subscribe if you think that's helpful, or get your brain going, starting to think about new things. And depending on when you're watching this, I think it's May 24th, 2022 right now. So this might be old news by that time, but make sure you watch an ad. It's free content. I don't charge you anything to hear my thoughts and ideas. And maybe they're not worth anything anyway. So have a good one.